Hi and welcome to the Market Alert for Friday, the 9th of April 2021. So the S&P futures, European stocks hit all-time highs as rates slide according to the news yesterday. So far it seems we're in a Goldilocks situation. Expect US stocks to continue outperforming non-US stocks, at least in the short term. Equities to outperform bonds. If corporate earnings surprise the upside, this would pave the way for more record highs. Well, it probably will. I'm expecting all sorts of wonderful economic figures coming out in the next few months, given that the lockdowns are easing. That goes hand in hand. That seems to be the news. As I say here, bonds jump, stocks dump. That's only on the open, as VIX curve signals trouble ahead because it recovered by the end of the session. This was taken when the market opened. It's not unrealistic to think that there are some who are hedging the idea that some modest selling could spiral into something more meaningful in a late summer, early fall. Also, as I've said before, selling may go away. Expected correction during this period. That seems to be the trend and has been for many years. Powell spoke yesterday. What did he say? Well, not a lot really. Nothing that we don't already know. Powell sees a brighter outlook for the US economy from fiscal support and vaccines, with monetary policy still supportive. That means printing more money and continuing to do more of the same and getting the same results. But then he turns negative and he says, but the recovery is uneven. Millions are still unemployed and a new jump in COVID cases could cripple the recovery. I don't know what this is with this, cases, because, being asymptomatic has got nothing to do with the recovery, apart from that you have to isolate. You don't lose your job or bizarre. Very, very strange. But it's a great way. I think it's more of a case-demic as opposed to looking at the unfortunate deaths that arise. But again, they'll use whatever semantics they need in order to keep that fear aspect and also hedge the bets of printing more money, as it says here. Monetary policy still supportive and fiscal support as well. Biden's deal. So there you go. That's the news. Speaking of news, there is no economic news today for the market. The yields are at 1.644, so still relatively low, although moving a bit overnight. We can see there. Implied volatility was, I've actually made an error here. 14.27 is Tuesday's, but yesterday we dropped down to 13.45. We have a new low, and that's what's important in this chart. I think we were at 13.78 yesterday. Can't quite remember. But like I say, the important thing here is this 13.45. We have a new low in the implied volatility. The lower this goes, the bigger the correction we will see in the underlying market, i.e. the Dow. As you can see here, got down to around that 10% area, and that would be wonderful if we can do that by the end of the month, because then we can get a really good correction. We won't be getting anything like that we saw last year with the COVID pandemic turning up, the market correcting 40%, but all of these other small corrections along the way are what we'll be looking for. We haven't had one for a long time now, a decent correction, so decent correction will be useful before we head back to those highs. I think, as I say, we've got a lot of good economic news to come in the next few months as they go through the summer and the economy opens up from the last lockdowns. So let's have a look at the overnight markets. This is the DAX. I want the Dow to start with. You can see we've been sideways for most of this week. Still have the all-time high. Market's still above the 5-bar moving averages, as the headline said that US stocks would outperform and be stronger. And it appears to be that's the case at the moment, because if we move to the DAX and go to the daily chart, you can see that we're below the 5-bar moving average for the last 4 days here as well. We're also sideways, which you can see. Yesterday there we managed to break Tuesday's, was it Tuesdays or Wednesdays? Wednesday's low and Wednesday's high, and at the moment we're still looking weakish on the overnight there as well, which we can see here that prices are below the DP and the 200 MA, and moving lower at the moment. So let's just compress everything up and have a look, see what we've got. On the downside, we've got the S1 and yesterday's low that the futures market could move down to. However, we could also see prices attempt to get above the 200 and the DP, which is really important to keep the bullish market moving, and also get above yesterday's high as well. So we could see some initial selling. The importance of the low will be explained if we look at yesterday afternoon's session as well in just a moment. So overnight, prices managing to stay above the 200 and the DP. We got retracements of 89% there on 2 occasions before prices broke through the DP and the 200 MA, and then have come back, hit it as resistance here. You see another spike in selling there as prices have moved lower. And from this low to this high, we're looking at the moment around 62% retracement in prices as well. In the metals markets and the dollar, well, we can expect some profit taken as we've traded up to the 62% retracement here from this recent low to the high projected back. We need to stay above the 200 MA, which is also the $25 per ounce level as well. And we're certainly looking like this overnight. We're at the 20 bar moving average at the moment for silver. This is likely to be broken, and we can see there we're just coming through the DP in the 5-minute chart. They did buy back in here and it's failed, but then saying that, we've got a bit of a cluster here. I think it's going to be one of these days where we get bounces followed by further more acceleration to the downside for the silver market, and that's because we have a look at the dollar. This is also at a 62% retracement from this low to this high. It's a mirror image of what we're seeing in silver. The 200 MA has to be resistance here for support in the silver market, and also resistance in the dollar to then send it back to the downside there. Gold, a bit stronger actually, managed to double top up to the 1755 area yesterday. But again, you can see this also moving down on the overnight there in the 5-minute chart as well, heading towards the DP. So a bit stronger than silver at the moment, and a cluster of volume, climatic volume there as well at the moment. So if it can hold and stay above the DP, that would be a great thing to see there as well. So a quick look at yesterday's trading session. So in the futures, we saw the market spike up, a lot of volume. Then we've got a retracement back to the BRN, and prices moving down to the 200 MA there. I'm just going to whiz through this because, as you saw in the daily chart, the market was really quiet. Very interesting support there at the 200 MA. And I'll just fast forward because I had to reload the charts, just bring you back up to speed. And here we go. So there's the 200 MA with the buying. Very important area, as is the high, the low, etc. So you can see we've got a retracement back here about 78% on the fibs, and we're starting to move to the downside, and we've just saw some selling at the high as well. So we're getting back to the previous day's high. We're now seeing selling taking place there, and then they try to bring the market back. This fails as the battle starts in the opening salvo, as you can see there, with 2 bars of selling. I'll just have to bring this back again. So we've got selling here, and then we see some profit taking by the shorts. So immediately the market's in a very narrow range to start off with, trying to come back, as you can see here, managing to trade up to the BRN there with the buy signal. The problem is this is a triple top. Got some selling to the left, and then we had the market moving lower just as we kicked off in the cash session there, and prices then just reverse and move back again. The high giving this market some grief. We can see that we had a bit of support at 78.89. Only temporary though, as the market wanted to have a look at the close and the DP level there, get a bit of a bounce. As soon as we close back below the 5 bar moving average, we have another test. So we got up, back, and then starting to move to these fibs on the upside. However, this is short-lived as well, as the market then drives through the close and continues to do this with small bounces in a range, and you'll see in a second that prices were then sent through sharply to the DP level, where they didn't hold as we took out the BRN. We needed a big shakeout, and then the market got its shakeout, and you can see that climatic volume there as it did this. Then prices trade back to the upside, and then start to sit in a range as hang on, yeah, we go back to that, and then stayed in this range. There we go. Wonder what happened there. That's the afternoon session. So yeah, you can see that prices after the shakeout then just became sideways, and there's your DP there, and the low. And I'm showing you those because as we go into the afternoon, you can see that prices traded back to the DP. Watch this low, really important, and this is why it's very useful to have these targets on the chart. You can see that we opened, and the market was sent to the downside, and we're closing below the 200 MA there as well. We find a bit of support. Prices attempt to bounce. They only manage a 50% retracement before prices are sent down to 89. And just as in the morning session, this failed to hold because we had the low to look at, whereas in the morning session we were coming down to the DP. We're now the other side of the DP. We get a big bounce back here. Again, you can see them buying back in here at the low, and the low became really crucial for this market because it made a retracement there up to 89%. This one held. We can see an increase in volume as well, and then prices reversed and moved back down again, all the way down to play with the low. The market then came back, had another look at the low, and then said, okay, let's have a test below the low, see who wants to sell. Nobody wanted to sell. You can see them buying back there, and then prices said, no, let's just make sure. So another one, there's less volume here, so there's nobody selling, and then they're free to bring the market back, and that's precisely what happens as you'll see prices moving up. Even after the 4 p.m. slot, you'll see them bringing the market back up as Powell got ready to speak here. So whether something was leaked or they started early, I don't know, but prices came all the way back up to the DP level. But really important here is how the low is a major support area for a bullish market, as is taking the high out. If you can take the high out and stay above it, then that's great. And if you don't want to take the low out, if you look at the daily chart, you can see this. Let me just bring up the daily. You can see this all the way along here. Don't attack the previous day's low if you can help it. And you can see that it's been very important to hold it at this level for the last few days. So if we take out the any of these lows, given that we've had a big move to the upside, then we could see prices move sharply lower. So that's going to be key today. We look at the 2 minute, which at the moment is just bring this reset it just so we can see that low. So this low is going to be crucial during today's trading session if prices are sent down to this level. Okay, I think I've covered everything there. If I haven't, I apologize, but yeah, let's see what happens today. It's Friday, so have a great weekend, and as ever, thanks for watching. See you in the next one.